Croatian borrowers with loans in Swiss francs have met with the country's Prime Minister to tackle the issue of soaring mortgage fees. It follows a decision by the Croatian government this week to fix the exchange rate of the Swiss franc against the local kuna currency for 1 year. Some 60,000 housing loans in Croatia with a total value of $4 billion are in Swiss francs. You've seen how many people there are with loans in Swiss francs who are contemplating suicide. God forbid something like that should happen. And if it did, then everyone should ask why we hadn't reacted sooner. We reacted in order to protect citizens. Many borrowers in Central Europe took out mortgages in Swiss francs to capitalize on low Swiss interest rates during the early 2000s. However, borrowers began to lose out when the financial crisis hit and the franc's value surged. A shock decision last week by the Swiss National Bank to abandon the currency ceiling against the euro has compounded the problem. This use of Swiss franc loans spread to other countries in the region, like Hungary and Poland, and in Croatia as well. When we talk about Croatia, we have to keep in mind that after the first bank had introduced such loans to the Croatian market, there was huge interest, so other banks had to follow suit in offering loans in Swiss francs, simply because lower interest rates made them more attractive for citizens, in spite of some warnings. Over 500,000 Polish citizens also have loans denominated in Swiss francs, which has risen over 20% against the Polish zloty in the past week. In response, the government has called on banks to provide relief to homeowners. An investigation into lending practices has also been launched. Poland is growing and has an increasingly significant economy, but its power in the financial system is not large enough to reverse this kind of changes in world currency markets. What has happened with the franc rate has nothing to do with Poland's situation. In Hungary, the government of Viktor Orban said Croatian and Polish officials had shown interest in Budapest's decision late last year to convert foreign currency mortgages into Hungarian forints, a move that helped borrowers but hurt banks.